28. Now that is not just some random number pulled out of a hat. That is the exact number of straight profitable quarters achieved by the company we're looking at today. I mean, think about that. In a world of crazy, volatile markets and constantly shifting economic conditions, seeing that level of absolute financial consistency, well, it's incredibly rare.
Which naturally leads us to a pretty fascinating question, right? How exactly does a water and land development company actually build such a durable, shock-resistant profit engine? Like, what's their secret sauce?
Well, welcome to This Explainer. Today, we are going to break down PureCycle Corporation's Q3 2026 earnings presentation to really uncover the mechanics behind their incredible financial predictability and growth.
All right, let's dive right into this. Here's our roadmap for today. First up, we're unpacking the resilient profit engine. Second, we'll look at the Q3 and year-to-date financials. Third, the water utility segment. Fourth, we'll check out the Sky Ranch land development. And finally, we'll cap it off by looking at their future runway.
Starting things off with Section 1, the resilient profit engine, where consistency is absolutely key.
So PureCycle hasn't just survived recently, they've actually posted net income for 7 consecutive years. But, historical profits only tell part of the story. Take a look at their current liquidity. As of Q3 2026, they're sitting on $14.6 million in cash and restricted cash, alongside this massive $59.1 million note receivable. Seriously, having that kind of dry powder gives them just immense flexibility when it comes to capital allocation.
So how does this engine actually work in the real world? Well, it functions a lot like a brilliant interconnected flywheel. Think of it like this. First, they prepare and develop land. That naturally attracts home builders. Then those builders bring in residents. And here's the kicker. Those residents become lifelong customers paying recurring utility fees for water and wastewater. Add in the highly lucrative short-term oil and gas water sales, and you've got these multiple compounding revenue streams that just feed right back into one another.
And of course, driving this whole complex engine is a leadership team with decades of hyper-local expertise. President and CEO Mark Harding has been steering the ship for an impressive 36 years, and over that time, he successfully acquired over $160 million in water and land interests. And he's backed by a really specialized team: CFO Mark Spezialy, VP of Engineering Brent Broyard, and VP of Land Development Dirk Lashnitz. These guys possess that exact on-the-ground knowledge you need to keep a flywheel like this turning smoothly.
All right, let's see how that engine actually performs under the hood as we move to Section 2, Q3 and year-to-date financials.
The numbers we're seeing here tell a pretty remarkable story of accelerating growth. Back in Q3 of 2024, revenue sat at $4.8 million. Fast forward to 2026, it didn't just creep up, it surged to a whopping $8.2 million. This jump was primarily driven by those high-margin water sales to oil and gas operators, plus some really solid momentum in their Phase 2D land development project.
And you can see how this momentum flows straight to the bottom line. Q3 net income increased a very solid 31% year over year, climbing from $2.2 million in Q3 2025 to over $2.9 million in Q3 2026. Ultimately, this translates to earnings per share of 12 cents, up from 9 cents the year before. It just brilliantly illustrates that their top-line revenue is successfully and super efficiently converting into real, tangible profit.
But, it's not just a good standalone quarter, it's actually been a phenomenal year-to-date performance. Year-to-date revenue has already hit $29.1 million. To put that in perspective, PureCycle has already captured an impressive 77% of their full-year revenue guidance and 69% of their gross profit forecast. They are basically front-loading their success super early in the fiscal year.
Now let's dig into exactly where this cash flow comes from, starting with Section 3, the water utility segment, recurring cash flow.
Actually, before we look at the growth numbers, let's define a pretty crucial term you need to know: O&G raw water. This is basically raw, untreated water provided to oil and gas operators, specifically for drilling and fracking operations, right inside PureCycle's service area. This is a vital, incremental, incredibly high-margin piece of their industrial revenue puzzle. It basically acts as a supercharger for their income.
Now, stepping beyond that industrial side for a second, their core domestic utility business is just incredibly stable, and it's growing fast. We're talking a 21% increase in recurring utility revenue over the first 9 months of the year alone. Plus, they're seeing a really steady 22% compounded annual growth rate in new customers. And when you consider that each average customer generates about $1,500 annually, you can see how they've built this highly predictable bedrock layer of recurring cash flow.
Going back to that industrial side for just a moment to see why that revenue jumped so much earlier, the scale here is honestly staggering. To date, over 250 oil and gas wells have been drilled in their service area, generating an average of, wait for it, $250,000 in water sales per well. And with a dedicated oil rig capable of drilling roughly 60 wells a year across their massive 200 square mile territory, yeah, this segment provides a massive injection of high-margin capital right on top of that recurring domestic base.
Which brings us directly to the segment that actually builds that domestic customer base in the first place. Section 4, Sky Ranch Land Development, Building the Ecosystem.
Now, what's really interesting here is the deliberate, phased rollout of the Sky Ranch community. It's not just one giant, chaotic construction project, it's a highly systematic pipeline. Look at Phase 2C, featuring 228 lots. That is already 95% complete. And that transitions just seamlessly into Phase 2D with 204 lots where they are actively hitting milestones right now. And right behind that, Phase 2E is ramping up, with its 159 lots already nearly 60% graded. This step-by-step approach is exactly what guarantees them continuous revenue visibility well into 2027.
Let's actually compare the financial value of these sequential phases. Phase 2C brought in $17.3 million in lot revenue and $7.3 million in tap fees. But Phase 2D is expected to yield even more, $17.8 million in lot revenues and $8.6 million in tap fees. And keep in mind, these multi-million-dollar cash infusions happen while simultaneously adding hundreds of thousands of dollars in permanent, recurring annual utility and rental income. It's quite literally a compounding wealth machine. Finally, let's zoom out and look at the big picture. In Section 5, the future runway, massive untapped potential.
Remember all those massive revenues and development phases we were literally just talking about? Well, here is the absolutely crucial point. All of that historical success, it accounts for only 3% of their total capacity sold to date. 3%. That leaves a staggering 95.5% of their 60,000 connection capacity completely untouched and just waiting to be developed. I mean, the scale of that is absolutely massive.
So what does that remaining capacity actually mean in hard dollars? Well, based on current rates, those remaining 60,000 connections represent an estimated $2.3 billion, yes, with a B, $2.3 billion in potential future revenues. Honestly, the runway ahead of this company is almost hard to comprehend. And what's great is they actually have the physical resources secured to back all of this up. They are currently only using 1,050 acre-feet of water, compared to a massive 2,577 acre-feet available to them. That is a huge physical buffer of water just ready and waiting to be deployed to support this tremendous future growth. So we've seen how their interconnected flywheel works. It's delivering high-margin industrial water sales, it's stacking multi-million-dollar land developments, and it's cementing recurring utility income for literally decades to come. So with over 95% of their capacity still remaining in the tank, what on earth will the next 28 quarters look like for this incredibly resilient profit engine? It is going to be absolutely fascinating to watch unfold. Thanks for joining me for this explainer, and as always, keep learning.